Attendees are in listen-only mode.
Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have a live trading room open to trade stock and options using our technology. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. Bill, Claude, good morning. How are you? Larissa, Alone, Bob, Claude, David, Gary, Max, R, Ricardo, Scott, Ted, Vampsidar, Bill. All right. Everybody's ready. Welcome on YouTube. We have a live broadcast on YouTube. Alone, thank you. All right, then let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. We'll go over key support and resistance levels, go over some of the hedging techniques and risk management. For those of you who are new, welcome. This is my brief bio. My background is technology, building technology. I was a CTO of several publicly traded companies. Been managing my own money for the past over 20 years now, using the technology I've built and experience I've collected on working in several financial technology firms. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I encourage you to visit link on your screen to understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance. All right, very important concepts. I think the goal for a trader, if you interview someone for a trading job, should be becoming a disciplined, long-term trader or investor, right? That you're disciplined and confident, right? Those are the two characteristics. How can you become disciplined and confident? The only way to do this is through practice, right? Practice building a repeatable process, which consists of first trading plan, right? Just like any business, you have to write a business plan. In this business plan, I would encourage you, or trading plan, I would encourage you to decide how much cash is appropriate for you, right? Everybody's different, but to have in your account. I propose 30% if you think we're in soft landing, inflation is subsiding. We just had a CPI print 50 minutes ago, which came in, better than expected. Some data better, some core CPI maybe slightly higher. But inflation is subsiding and shelter finally start slowing down. So if you're in soft landing and you think inflation is going to continue to subside and Fed will start lowering interest rate drop significantly, we still have a very strong employment, then 30% of your portfolio in cash. If you think banks are lending less and not giving out loans, it's hard for small business to give out loans. Retail numbers are going to start deteriorating, and unemployment is going to start ticking up, and we cannot avoid the recession, and the recession is not factored into the current price levels. Then you have 50% of your portfolio in cash. So in both cases, you could be bullish, you can be bearish. I would propose somewhere between 30 and 50% of your portfolio in cash, especially now that most money market funds pay you somewhere between 4.5 and 5% yield. Then in terms of the other half of your portfolio, Everything is highly correlated. You can see technology was leading in January and February, and now value stocks are leading in April, March, and then they're both going to sell off or they're both going to rally. So most of the sectors, most of the stocks are highly correlated, right? I'm a bottom-up approach. I know on the news there are a lot of analysts coming out and say, listen, we're a bottom-up approach. We don't care what happens in the economy. And we can find stocks that are a great value, right? Value investors, bottom up, and I'm not that type of trader. I think it's going to be very difficult to be a value investor for the next 6 to 12 months because most stocks are highly correlated in the bear market, right? Despite their financial, balance sheet and income statements. So I'm more of a top to bottom approach. So for that reason, I propose to have no more than 4 positions. If you are bottom up and you love stocks, okay, fine, you can have 8 positions. But it's going to be hard for you to manage more than 8 positions or find more than 8 stocks that are diverging from the market trend. Right? We have the stats. Out of the 500 S&P 500 stocks, only 20 contributed to the past 6 months rally. Majority of the gains, only 20 stocks. So finding these 20 out of 500, it's not a trivial task, and especially when everybody's piling into these trades. So for that reason, I propose to have 4 positions and not risk more than 2.5%. Negative visualizations and positive visualizations are extremely important, right, to determine your risk management, right? We're still trading in the bear market. I believe we're trading in the bear market. You can see in the past 12 months, prices exactly where they were 12 months ago. So by definition, this is a trader's market. This is not a buy and hold market. So in the trader's market, you have to be disciplined and you have to visualize stock going in your direction and stock going against you. So I go through these exercises, I close my eyes, I do some breathing exercise, and then I visualize stock going up, reaching my target gain, or stock going against me and visualizing my stop loss, right? So those exercises are extremely important. Let's go through one. John, good. Bob, present. We're not, well, definition of what the bear market is, right? You're right. In the past 6 months, if you look at QQQ, it's up 20%. By definition, QQQ is in bull market, right? But from the top, we're still pattern of lower highs and lower lows for the past 16 months. So even the past 16 months, we're continue to making lower highs and lower lows. We're in the bear market. Again, it all depends on definition. So if your definition is QQQ up 20%, that means we're in the bull market, fine. Then yes, you're right, we are in the bull market. But since market didn't go anywhere in the past 12 months, I'm going to assume the best case scenario, it's just kind of a sideways market. All right. So let's go through that positive and negative scenario, right? So we have inflation data, right? And so CPI year over year, a better print, right? We dropped from 6 to 5%. So the headline news looks great, right? Looks great. Core CPI in line with expectations, slightly higher than the last print, right? So definitely a drop in food and price. Finally find some drop in prices of food and energy. Shelter is slowly coming down, but still service CPI is stubbornly high. And core CPI is still, kind of relatively high. We're going to have a FOMC meeting, and then tomorrow is earnings season. Today also FOMC meeting minutes. So I do expect potentially more volatility around 2 p.m. So initial reaction in the market, Spiders is up 0.5%. Let's look at the yield, right? We said yield, I actually thought yield would rally if there's a positive print. Right now we have a mixed reaction. Again, the yield drops, everybody kind of, it's a self-serving bias, right? Bulls explain, well, Vlad, headline news is much better than expected, right? Fed will pivot. There's no reason to keep these elevated interest rates. Unemployment is low, so that's why interest rates are dropping, and technology is up, up 60 basis points, right? So that's soft landing interpretation. Bear's interpretation is that inflation is still elevated, right? Core CPI is still elevated. Fed is not going to pivot because inflation is still stubbornly high and elevated. And the reasons the rates are dropping because people are concerned about the recession, i.e. meaning that Fed is going to stay, interest rates is going to stay higher for longer. And at some point, we're going to have similar issues that we had with Silicon Valley Bank. We're going to have it somewhere else. I don't know where it is. Maybe it's residential real estate. There are more and more defaults, right? If you open up Wall Street Journal, more defaults in multifamily buildings where large companies are basically selling. Trying to rent my unit in Miami, I haven't got a single phone call, which is very unusual. Headline, another Wall Street Journal article, everybody's canceling their subscriptions to everything. I can tell you in Tradespoon yellow panel, a lot of people canceling subscriptions, right? Netflix, a lot of people canceling subscription. Apple, consumers are cost conscious, right? Cost conscious, and they are, and the economy is slowing down, right? So everybody uses their own interpretation based on which camp they're in. So let's say you are in a soft landing and you think, Vlad, spiders are up, we're heading higher, we're going to at least reach year-to-date high, which is around 416 level. And by the way, we're not that far from August high 430, so PPI is going to be probably much better than expected. Retail sales probably going to be better than everybody is feared, and market is heading higher, right? I think we can get to 420 or even 430, which is 2 to 5% rally. Okay, so you're entering the trade at 411. The second decision is, well, how many shares do I buy or how many contracts do I buy? I propose, whether you're in soft landing or hard landing, if you want to be a disciplined trader, you have to assume that the trade can go against you. So if the trade can go against you, right, because you're in soft landing, but the hard landing, there's more evidence of hard landing, or vice versa, you're in hard landing, more evidence of soft landing. $10,000, I propose not to risk more than 2.5%. So $250, right? So you can invest $250. $250 for 11. Where's the next support level? Well, we see this line, right? Spends over March, April, multi-months, months. That usually holds, right? So it's around 405. So if I buy in at 412, 405, call it 7 to 8 points. So that's my stop level number one, 8 points, right? That's my support level, stop level number one. We're talking about day trading because Fed meeting minutes can occur at 2 p.m. Eastern, 1 p.m. Central. If there is no indication that Fed is going to lower interest rate, but 10-year is at 3.38 breaking down, right? 2 years breaking down. Everybody's going to say, well, why is Fed so stubborn and doesn't want to lower interest rate? But the bond market continues to push the prices down, right? This divergence, the yield inversion, and then all of a sudden you have a reversal in the market. So by end of day, we could be at 405. So, okay, so then 8 points if you're doing day trading. If you're not comfortable with these large gyrations, right? 1%, 2% up, 1%, 2% down, then you basically step back, give yourself more time, give yourself a bit more space, and the next support is around 400, right? Support number 2. Right, so that's support number 2. Give me 1 second. Sorry, give me just 1 second. Fed is releasing last meeting notes today. Yes, Kevin, yes. What do you think the goal was due in inflation? Again, everybody have their own interpretation, right? Bulls probably have a scratch in their head with silver, right? That doesn't make sense because silver pre-market or we just open is actually up, right? Continue to break out, and gold continues to break out. Then the question is why, right? Why is gold and silver continues to go higher if we're in soft landing, right? So that's a recessionary trade, right? So it doesn't make sense that technology is up 75 basis points, spiders is up 50 basis points, and silver is up 1%. They should be inversely correlated, right? Because you can see last year, silver was trading in a strong downtrend, right? Silver trading to the strong downtrend last year, and now it's in strong uptrend and basically almost at 52-week high, right? Or close to that level. Yeah, so it's close to 52-week high. Basically, it didn't go anywhere. So silver and gold is outperforming, value stocks. It's outperforming technology stocks. Why? Best explanation is recession, right? I mean, soft landing, they can basically say, listen, it's metal, you need it in some of the manufacturing, so it's trading like metal. But if you look at other metals, like copper, it's, which is a proxy, it's far from 52-week high. So that's silver and gold. So going back to the positive and negative visualizations. Positive visualization, 8 points. How many shares can you buy? $250. That's 30 shares, right? And again, because of the reversal, I would say invest 5 shares. I mean, invest maybe half of these shares, 15 shares now. And if we do have a reversal after the FOMC meeting minutes release, right now we're kind of trying to break through this level. And if we do have a pullback, then you can lower your if we do have a pullback, let's say right now the breakout is 410, right? So let's look at stock forecast toolbox. Model basically predicted for today range to be between 409 and 410, right? So 410. So if we do pull back to 410, right, in your short-term day trader, we close this, not close gap completely, but at least this would be a better entry point, right? Around 410, 411. Right? Well, model actually says 410. So ideally 410, maybe 411 is where you would consider entering your trade. So you put 15 shares, right? So risk $100, let's say at current level, because you think there is a continuation, but you leave the other half in case we do close the gap and stock forecast is right and we reach 410 level. So that would be the setup. Any questions? In terms of short-term trading, right? Short-term, I think there is a little bit more room to the upside. I think we can squeeze maybe 1 or 2%, maybe even 5%, I guess. Unlikely, but we could squeeze maybe a couple more percent out of the stock market. So then, I would do short-term trading, right? I have QQQ put spread, and then I look at active trader. You can see aggressive power trader on yellow tunnel or active trader on stock on Tradespoon. You have a list. So metals, CF, steel, copper, home builders, insurance, Visa, So you can see value stocks are leading, not a single signal on the technology, but mostly you do have these large moves in Polity Group, right? Visa, Prudential, and insurance. So let's see, Visa. So we can try to do Visa, right? So you have a stop loss here, probably around 230. So maybe $1, maybe $2 risk. So $250, $250, maybe I would do 50 shares, right? Maybe 40 shares. So let's try to do that. Let's buy Visa. Basically, model sees that Visa potentially can outperform the market in the next few days. So same thing. 100. If you buy one contract, 100 shares, that's $23,000. I think it's okay on 20 if you're doing day trading, $25,000 account. On $10,000 account, it's you're basically using all of your money. So I would do maybe. So let's do Visa. Risk $100 to 30. Okay. So 231.15, and look for 0.5%, right? So 1% would be $2, 0.5% would be $1, right? So I would sell. $232. It's a little bit overbought. Okay, so I bought at 231.20. I'm trying to close at 232.20. Capture $1. That would be 0.5%. You can close. Usually, what I do then, maybe close half of the shares at 232.20. Capture 0.5%, and then close the rest of the 233, which would be 1%. So for short-term trading, day trading, or if I hold a position overnight, VIX is very low, right? VIX is 18, 19 level. You need to expect 1% price fluctuation. You can time it perfectly. So usually I do half. So 0.5%, I think it's appropriate. If VIX was at 40 and market would move 2% every day, okay, then maybe look for a 1% gain, right? You have to have reasonable expectations when you trade in stocks. Look at their beta, right? I'm trading S&P 500 stocks. If I trade more volatile stock, okay, then you just have to adjust for beta. If beta is 2-to-1 with S&P, okay, then you can look for 1% move. But the most important is kind of to look at the stop losses, right? If you're very aggressive, I would say Visa is in trouble if we do close this gap, right? So if we drop to 229, then it's a problem, right? Then this momentum is deteriorating. That's about 1%, 1% to 29. So for that reason, I would break it apart into half, right? I would break it apart into half increments, right? I would say, you buy half at 231, and then maybe you buy another half at 229, so you don't get stopped out, right? And then if we do break here, this is your stop loss, right? So you buy half of the, here you might be down $100, right, on $10,000 account, maybe $100 here, and here you're down maybe another $80. So you're down $200, and once you're down $250, you're out. Because if you are investing the full amount, then if we do pull back at least to 230 and 229, then you would have to think about exiting this order. Unless a lot of people, they don't like to do short-term trading, right? They don't like to do short-term trading. Then I would zoom out, right? I would go into 1 hour chart and basically say, Vlad, I'd rather trade less, right? Less shares. Probably, right? I would go into, 1 hour, right? So somewhere around, well, you have this gap, right? If it's going to close, that would be probably more conservative, 228. If you want to hold it for a couple of days, okay, 228. So you just reduce your size, by half. But you always have that number in your head, right? $10,000 account, $250 maximum loss. And you always kind of have a skeptic in you, right? Well, yeah, inflation is better than expected, but you know what? Core CPI is not. Maybe market will reverse. Okay, so, and market is overbought short term. So then I would buy less. Meanwhile, Amazon is weak. You want to say hi to everybody?
Hi.
Okay, good job. Apple is slightly higher. Amazon is flat. And Spiders is up 40 basis points. Semis are slightly negative. QQQ slightly positive. So far, kind of people are, digesting. Again, I think inflation data is now secondary, right? It used to be the most important data point. Now people are going to concentrate more on Fed meeting minutes, right? They're going to concentrate more on retail numbers tomorrow, and definitely on the earnings results, tomorrow, starting tomorrow and Friday. Kevin's new 8-ball, ChatGPT. Working on ChatGPT. Oh, somebody else has been 6-ball. Okay. Can you do a call on Visa? I mean, you can do a call on Visa. You could do, if you're trading 100 shares of stock, I guess you can do Visa call. I would do it in the money, right? Delta 75, because I'm looking for small price fluctuation, right? If Visa moves by $1 and you have Delta 70 call, you're only going to move by 70 cents, right? So just keep that in mind, right? If you do it out of the money, Delta 30, then if Visa moves by $1, your call is only going to move by 30 cents. So you have to look at the risk, target gain, and stop loss, right? Day trading, I like to do stocks better, right? Stocks better, especially if you have, 10,000. For this type of trade, for short-term trade, you have to have $25,000, right? Because if I buy and close today and use these proceeds, I'm going to be flagged as a pattern day trader. So I need to have more than $25,000. So for that $25,000, I'd rather do stock. But calls are totally possible. Obviously, depends on your account size. Bitcoin up again. Great. Thank you for sharing. Bitcoin is relentlessly higher. It is a proxy for risk taking. And for now, we are in the bull market since QQQ is up 20%, right? So that makes sense. Maybe it's delayed, but it's kind of flatlining. Okay. So yield actually reversing, right, in the last couple minutes. Yeah, so you have gap down on the yield after the CPI print, now kind of closing the gap, and QQQ flat, spiders up 30 basis points. I don't know if you have any questions. Yeah, looks like market is reversing.